send you.
There we go.
I'm gonna forward you my questions. The list is a bit long, but you can pick out which ones you think make sense to answer. Some of them are saved from things you have never responded to.
All right,
Oh crap! Oh, it didn't copy. It didn't copy all of them.
This looks weird.
Hold on.
Looks like
Yeah,
a
it
lot.
didn't copy all of them. No, but when you read them, you realize that they're kind of a lot of them are around the same things. And if you say
Yeah.
the question out loud, I'll be able to explain a bit better.
Okay. So the first one is the inefficiency printed once we have an opposing candle or a swing point for EO ranges.
Yes, confirmation, because I've been doing it since we have an opposing candle. So, like, say on your screen, let's say EO, we push up above here. My question is, if a down candle prints for EO ranges only, not ONS, if a down candle prints before we make the high, are you now more focused on that being your EO range inefficiency? Or if a down candle prints, we push up again, are you marking out each one for the EO range? And do you view them separately or something that needs to be filled together?
Sounds like you're reading too deep into what an inefficiency is. And
Okay, take me out the dark hole then, because that question comes later. I feel like inefficiencies are just resting liquidity, but I wanted you to clarify.
So inefficiency by design has to be one-sided displacement.
Yeah.
For us, we keep it simple by looking at one-sided displacement since a point in time. So we never have to think about looking through a million candles, looking back a million candles. It's always a clear reference point, time, then the delivery after that point in time. So if we're looking at inefficiencies from an EO perspective, timed EO, for example, we're looking at since right here, 12 o'clock, for example, we have one-sided delivery.
Yeah.
Okay. If this is one-sided delivery, if only down candles exist in this push, and that's inefficient, we need up candles, bodies above the open, and life is good.
But what about in a scenario like this is a good example? A swing low creates here, so then closing below it. If you're not looking at it from a time deal perspective and just structure, we then get hit up with another one here, another EO, and another start of more inefficiencies. So my question is, are you now still looking at all of that as one delivery, or do you now start looking at that as the beginning of another delivery?
So here's what I think that you're doing.
Yeah.
You're looking at bar by bar analysis and the entire price leg, and you're second guessing. That's what you're doing.
It sounds about right.
Yeah. Why? Why though? If you're reading bar by bar, right? We know bar by bar analysis is essentially the highest form of technical analysis or reading technical analysis because it's forcing you to look at the relationship between individual candles. Whereas looking at it through deliveries and swing points, we won't look at just right here. We look at the run from here all the way down. Once that swing is completed, right? In real time, if you see these three candles and you say this is a swing, no harm, no foul. If you see all of this go down here in real time again, and you say, oh, that's a swing, no harm, no foul. Because you're using the data as the market provides it. Cool?
But yeah, that's cool. But isn't it slightly subjective to do it like that?
In what sense?
In the sense that you can determine this is a swing, like where your mouse is, but then you could also determine the whole thing as a swing. So then what makes you decide which one to go with? Or are they two different processes? And I'm still not realizing that.
Define go with.
All right. So from what I'm understanding about EO is once it forms, it needs to look back to determine two levels that it's gonna, not two levels, but where it's gonna reach for first. That's a better way to phrase it.
Mm-hmm.
On the way to finding that first level that it's gonna reach for first, if we create this swing low, doesn't that essentially mean that a new EO delivery has started?
If you're looking at structural EOs or timed EOs, which one? Because if you're blending the two of them, you are going to create problems for yourself. Problems
so then
that need to be there.
maybe that question should have been higher up on the list, because then my question was going to be, you blend timed EOs with loop logic sometimes, but I don't really see you blend it with structure EOs. And my question is why? And is it smarter to leave structured EOs alone completely when you're playing timed EOs?
That's a good question. That's like a top tier question. So I think in every trader's mind, once you start getting exposed to any type of technical analysis, there's going to be the student aspect in your mind, the part that says, all right, this is what it is, and this is the Bible. I'm just going to stick to that, and that's it. No flexibility is allowed. Just exactly what the teacher said, and that's what you commit to. Then they're going to be the curious minds, the minds that try to see something that is learned now or taught now and try to blend it with something that they've seen before in efforts to either improve something or create something new, or just for that sheer feeling to say that, oh yeah, I put the pieces together.
Yeah. In relation to the same question that he's asking, would you say structural EOs are very relevant on 1 minute timeframes, or the timed EOs are more relevant really?
So again, trying to do that is pointless and a waste of time. Trying to frame importance around like trying to say that a concept is more important on one time frame it's not the best way to go about something that you want to be good at. Right? And I'll tell you why I say that. If you're looking at a M1 chart and you're thinking or trading or analyzing in terms of timed EOs, the open price of every candle that's significant is going to be important to you. But when you move to a 5-minute chart and you're looking at timed EOs, the 5-minute chart doesn't capture the open price of anything that's not divisible by 5. So now you start entering a world where there's a margin of error. Realistically, as you move away from the 1-minute chart, you have to factor in that delta. The 1-minute chart will be just close enough, but it won't be perfect. Or sometimes the 5-minute chart overlaps with a 1-minute structure. So like this is a failure swing on a 1 minute. If this is also a 5-minute failure swing, it's perfectly fine to look at. Realistically, we have to.
Sorry to quickly butt in. Mohan and Idris are in the waiting room and they can't get in.
That's weird. There's nobody in the waiting room here. Oh, sorry. Saw them. Just saw them. My bad. Got him. So.
Finally.
Here's the idea. Here's the idea. We cannot realistically, I'm not talking about something that you want to do or something that you're striving to do. You cannot realistically say that you want to apply lower time frame precision to higher time frame. So if you're moving away from an M1 to an M5, you must allow for yourself to get it wrong. When I say wrong, I mean the pinpoint accuracy. Allow yourself to be close enough when you start moving up. If you're using timed EOs and you're overlapping it with H1, right? When you start looking through an H1 lens, you're going to miss the intricacies from an M1 time frame. So if you keep that notion in mind and you start looking at timed EOs versus structured EOs, the logical question that you should think about is, what time frame am I using to frame my entry? Or what time frame am I using to frame something that's important? And the rest just it falls in place for you because your mind will tell you that, hey, this is rubbish. I can't do that. When you're looking at timed EOs and what makes timed EOs perfect when we talk about it, we're looking through a range of time. Inside here, we want price to be delivered in a particular way. We understand what it should look like. We understand what are the things inside this window of time that we want to see from price to make a decision. That's why the 1 minute is so hard to trade for most persons, because you go to a 1 minute chart with narrative and you think direction. You think this market is bearish and I'm on the 1 minute chart. So I just want to see up candles, lows taken, big down candles, and the market breaking lows. That's a fallacy. You can't realistically think that just because you can see the direction, the market is just going to always run in that direction. If that's your goal, you don't need to be on an M1. Do it on a daily chart or H1. Once you get to the M1, you're thinking about the how. How should this be delivered? How should the candles look for me to participate? How should anything? As you improve, right? The how that you look for on a 1 minute chart will start to change. You'll stop saying stuff like, I'm bearish and I just want a CSD and I enter. You'll stop doing that after spending some time on the M1. You'll start thinking, if this is what the M1 should do, these are the levels that the M1 could reference, because M1 is all about precision. And I'll go back to something we did on this call here yesterday. So I'll take off all of this so we can do it fresh. So follow me as we walk through the delivery since 10:36 yesterday. Somewhere here. That's 10:35. That's 10:36. Well, this one. This doesn't like me. There we go. You know which one is 10:36, right? This is not being very friendly. What I want you to see is this.
Oh,
since the open of 10:36, one, there is no 3-bar swing low below here, right? Everybody can see that, right?
yeah.
Cool. Then we start to trade higher. What does that mean? Nothing. It means nothing. It means the market is just trading higher.
Okay, yeah.
But at the same time, while this is happening, we know 10:36 to right here, that's a cycle. We don't know what the delivery inside a cycle looks like, but we have enough evidence to suggest what it can look like and how we can interpret the different intricacies of it. The one that we love the most, or the one that I point to the most because it happens, in my opinion, more than any other, is the one where we do this. Right? I spent a lot of time in the last week or two referencing this delivery because it happens more than any other delivery. This one, right? So every time EO starts on M1, I think it's perfectly natural if everybody expects that delivery to print. If you're expecting it to print and it doesn't print, then you do nothing. If you're expecting it to print and it prints, then you should know what are the signatures while it's printing that suggest what it's going to do next. You should know, well, in time you'll get an idea of how far up this could go and how far down this could go. But you should know once this happens, you should know what bodies are needed here and exactly the price level where bodies need to be. So you could reference exactly when the loop is closed here. So you could reference the exact candle that you can use as trigger. So you could reference exactly based on what's happening here, what condition or what delivery says just relax and do nothing. What condition says your direction is confirmed. Stop letting wiggles in the price action throw you off. Find the invalidation point, put your stop and leave it alone. If you need to reference a different time frame just to get a feel of, so let's say you're doing this on M1, and M1 intricacies have a whole lot of reference points, like a whole lot of failures. You're not sure which one to pick. Zoom out to the M5 and see, is there something on M5 here that would take precedence? Maybe a M5 lower high and an M1 is just chopping inside a candle or something. So you can.
Is it not cheating though?
It's not cheating. It's confluence.
Okay, cool.
Confluence. And we could use, like for example, remember this short here, right here? Maybe you did, but
no, I remember in the market, I didn't take it though.
On M1 here, besides this up candle and a CSD here, what says that you can short this? Not much on an M1 chart. On an M5 chart, there's a breakaway gap right here. We kiss the breakaway gap CSD, confluence for M1. So is that cheating because I use an M5 breakaway gap to frame my M1 order block? No, just
nah. By cheating, I meant if you're trying to understand time deals properly, would that be cheating? I didn't mean that it's cheating.
I'm just pulling a leg. Just pulling a leg.
Cool.
The aim is to understand when and where to make a decision and what decisions are likely based on what the market gives you. But I don't want to make this this portion of the explanation a long-winded one. This is what should stand out for everybody. Between EO low and there, what's missing?
Yep, it's down candles.
Down candle bodies. So the market's going up. We have a new delivery right here. This is the mindset of most traders, right? What I'm about to say. And if you feel attacked, I love you too. The market trades up here. It fails to get here. A new EO starts. The first CSD, you're hammering shorts.
Yeah.
Off the bat. Deliver objectives, deliver fractals go out the window, and it's all about trade entries. Madness. Every time when the direction is clear, it's just telling you what should happen. If you don't stick to how should it happen, you'll enter early, you'll have tight stops, you'll do all the little things that we do that makes us lose winning trades. Versus new delivery starts and I'm bearish. What delivery fractal is bearish in nature? Something that creates a loop, fills a loop, has an up candle low taken for the trigger, shorts. Simple. We don't know if it's going to form early. We don't know if this is going to be 2 down candles and then 2 big up candles in there. We don't know that. You can't know that. All we know is what it should look like. So you have to decide, am I going to sit and watch this for the next 84 minutes? The market drops. You have to decide, what am I going to do here to kill time so I don't get excited about, oh my God, I missed something here, or oh my God, let me take this here. I mean, of course, if you're aggressive, you will partake in stuff here. What I don't want you to adopt is the mindset of taking a trade that's not in line with proper rules that you know and winning, and then just saying, okay, didn't really wait for anything here, I just sold the CSD and I won. You can't tell me to wait for anything else next time.
Yeah, you think you're
you can't tell me that. You cannot come over here, Mr. Kishane, and tell me I can't sell the CSD because you're not always right. And I won the last time I did it. Okay, have fun. See how long.
But didn't you say with timed EOs like CSD long, CSD short?
With timed EOs?
Yeah.
Yes, you can. In line with something. So that's where I'm getting at. We want to short this. Why we want to short this? Because this is painstakingly obvious. But we're not jumping to get in the move just because we want the delivery fractal that's bearish. At this point in time, I'm not thinking I'm going to sell a CFD of this up candle because it's running buy side here. But 95% of persons are thinking like that. High taken up candle CSD short. That's just it. Even if this is just a wick down here, they're shorting without bodies being here. Market delivers. Okay, cool. This means nothing to me. Absolutely nothing. Market start trading lower. The moment we start getting down candles here, I start thinking EO open down candle. I'm looking for shorts after that is filled. We fill it right here. At this point in time, I have a low, EO low, downside targets, all these madness. I'm expecting speed, breakaway gaps, everything down here. I'm expecting bearish. Once this candle prints, it doesn't mean there's a bearish setup. It doesn't mean there's an entry. It just means because of the conviction of where the market should draw to and the fact that it's printing how I would like it to print, my confidence is increasing. Up candle prints right after the loop fill. Down candle prints right after. We talked about this in the morning call yesterday. If your direction is confirmed lower and there's a down candle and the high gets taken, buying that is low probability because running the down candle high is quite often OLR. We're bearish, we run highs, we tank. Simple. So trading or trying to get an absolute perfect entry inside here, wishful thinking. You can guess sometime and get it right, but why not just stick to the process since you're trying to do this long term? Who cares if you miss one trade? Who cares if every day this week you miss a trade because you were trying to follow the rules and the market ran without you? What's 1 week out of the year? 1 week out of the next 10 years of your life?
Right. Sometimes it's hard to see it like that, but you are right.
No, it's not hard to see like that. You see it, but you just make a decision. Who cares? It's 1 week, but who cares? Like a lot of persons say, me, for example, I can relax because I have quote unquote already made it. So it's easy to do that. No, I just gotten burned, losing money, not doing the right thing. So now these things just remind me of pain. So when you see something early entry, you're thinking, yes, on the wick, I'm thinking, man, I remember this. I remember that. So it doesn't entice me anymore.
So you wouldn't have shorted the CSD of that up candle here.
This on the call, I did a call yesterday, and I mentioned that the moment, what time is this? 12:33 is taking that high. I'm interested in shorts. We framed what a best case scenario would look like based on the M5. But we don't have to get into that. There was an M5 high here that made this look low probability, meaning this is a good entry, but that was perfection. So if you have two things like this and you're planning to put 100 lot on, scale into the position. Put 40 lots here. Put something here just to get in the move. You can build in lower. The market comes here, allow yourself to add to a losing trade in this condition because you entered before your ideal entry. There's nothing wrong with that. No pain in that. Ordinarily, adding to losing trades is just wrong. But if you know you entered early, ahead of that, take it. Sometimes you have to break the rules because you started out in a not ideal scenario. That's all. But anyway, once this happens, you're not thinking, oh, up candle, down candle, CSD buy. You're not thinking that. There are persons who were thinking that yesterday. I think there was one guy who scalped that quite luckily, and it got out with a 3R, something like that. But while this is happening, I'm not thinking buys here. I'm thinking when this 1231 candle is taken, this is the end of it. This lower prices. That's all I'm thinking. So all this madness happened. Then the market starts to break down.
So the fact that that range had taken essentially the range around the time DO took sell side and buy side, so that you could view that as a bullish dealing range. Even with that in mind, you wouldn't be interested because you know that we have an inefficiency from the cycle before we're still targeting.
So remember, it's what and how. What should the market do here? Reach into this. How should it do it? CSD. This is an example where in a perfect world, none of this happened. Like the moment with CSD, nothing happened until we get back below here. So none of this didn't happen. Everything in the box did not happen. That's essentially what this is saying.
Hey. So then, there are scenarios where we can leave an inefficiency open. What gives us indication that that's going to happen? And this, to be honest, this question is more from a structural EO standpoint, not so much a timed EO. So maybe that could be the reason, but I don't know.
I would argue that it's all going to be based on time or a higher time frame. Those are the only things that redefine a delivery. And that's probably a weird way to put it, but from time
yeah, sorry.
Oh, I'm saying from time to time, the market is just going to print outside of what's logical based on the rules that we know. We know that if this is liquidity and it takes the liquidity, when we take the candle here, we go short. We know that. That's a rule. There are going to be times when the rule prints, but for a couple minutes, the market will stay opposing to the delivery and then it continues later. It's almost like they're saying, in a perfect world, we have 1, 2, 3. Run this low, retrace, crush. Then in some instances, it becomes 4 deliveries. Run this low, retrace, hold, then crash. So when it's holding, that's when you start saying, oh my God, it's CSD and it's running deeper than it should. It's CSD and I knew it was going to retrace, but I thought this was all it needed to retrace for, and it's retracing a little bit deeper. Oh my God, I'm wrong. I need to switch directions. We all get that feeling. Retracements that are deeper than expected scare us out of good trades. You could short this and it drops like this, and then this retracement scares you out of your position. Then this happens and you end up trying to chase it, or you just end up feeling sorry for yourself. This is how trading is. It's designed to invoke emotional participation. Because what? Everybody wants it quick. If you want it in 5 minutes and it takes 7, you no longer want it.
Yeah, we start to get enough. Yeah.
I don't know. That's just how we're wired to be like that. There are even companies that say, if we assure you we're going to deliver it in 10 minutes and it arrives in 11 minutes, it's free, right? Stuff like that. Because they want to keep participation. The market is not trying to keep your participation. Market is telling, I'm going to take your money, and if you come back, I'm going to take more of your money. And like, quit playing. And you come and it takes your money, like, the market took my money. There's nothing surprising about it. It's just controlling your engagement in scenarios that you know are not ideal. I did not trade since Wednesday. I didn't trade Thursday. I didn't trade Friday. I didn't trade like MT4 stuff. I didn't trade anything like this because what? It felt 50-50. And I knew if I went in the market, I was very likely going to be looking for longs only. Even though Powell says whatever Powell said that made the market crash. So what do I do there? Well, I have a group of guys that I trade with, and I need to go perform. So I need to no. When I put size in the market and I win or I lose, you guys are not there. You don't cheer me on. So why am I going to subject myself to an environment where I need to prove something when I know that I could be wrong?
Yep.
For clout?
No, I get that. But let's not, because there's bare of us here.
So just understand this. If you are watching this live and we watched it live, the moment this happens at 12:33, you're bearish. Well, first of all, the moment this happens, you're bearish. All of this right here is just an not ideal example of a bearish setup. So you could decide here, how do I frame my trade entries, right? This guy taught me about EOs and EO ranges and trigger candles. I have a lot of things that show me where the market is being drawn to, and I have a lot of things that show me how to confirm direction. Which one are you building rules around? You have to start with one. Then experience shows you when you can switch from this one to the other to create your A plus setup and your B setup and all that good stuff. This right here is a good setup because the M5 stuff was there. That's ideal. The M5 breakaway gap from the morning session is right here. You remember the M5 breakaway gap? It's right here. This happening at the M5 breakaway gap, nothing magical or weird about it.
Yeah, that makes perfect sense. Everything's already been delivered at that point.
So this is a lesson that everybody should reasonably have in their journal for understanding as it relates to, if I want something to happen right here, what's the best setup look like? There's no delays, there's no distortion. We have bam, bam, fill, up candle, CSD, retrace, expand. Perfect. What about when the narrative is clear, but the structure isn't so clear? What about when this is the level you don't want to see the market close above and it keeps wicking above it like that? What do you do then? Do you say, well, this is the best entry, but below here confirms my direction? Can I just suspend the need to be in early and wait for a breakaway gap and then fade the breakaway gap or something? I don't need a good entry if the target is this far away. I don't need 100 points to be happy. Personally, I need 50 points every day. That's my quota for myself. And I don't need 50 points in one setup. I could get it throughout the entirety of the day. I just need 50 points of solid delivery. So if I have 100 lot on and it runs 20 points and I scale 80 out, I got 20 points there. If that trade continues to run, unless I look at the monetary value that I made from the trade in its entirety, I only got 20 points from that trade. So if I get another good setup and I get 20 and I partial at 20 again, that's 40 points for the day. If you pay attention to when we trade on the calls and then when I post setups in the afternoon, the only time you see me posting setups in the afternoon is if I partial early in the mornings. If you see me hold a trade full position in the morning, you don't see me posting charts in the afternoon. That's by design. If I have to partial early because I'm trading with size, I have to do more. That's just how it is. It's a bet that I make for myself. But I don't want to run away too much. But yeah, the moment this is taken, clear direction, life is good. Your drawn liquidity is down here. We hold it until we eventually get taken. Life is good. Everybody's happy. Your next question, do I jump in the one from the video or you're going to ask?
Does anyone else have any others?
I do.
Got more? Go on, Mohan.
Is it possible for me to share the screen?
Absolutely. Let me allow it. Bam. Bam. All yours.
Thank you. Right. Yeah. So I just wanted to check this that I was just reviewing. So on the trigger candles, so if we if this is the trigger candle right here, this one, we don't do anything if let's say it's a down candle. If its low is taken by a down candle, nothing here, Once this is taken by up candle, then we look for longs. Is that right?
Mhm.
Is that the correct interpretation?
Yeah, that's a logical interpretation.
Okay, and same thing for the downside. If this is a trigger candle is a green candle,
Mhm.
up candle, if this takes its high, nothing. This, the moment it takes this down candle takes this CSD, then we look for shorts.
Mhm.
Is that the right way to frame it?
That is correct.
Okay, thank you.
What validates a trigger candle? Because let's say you're waiting for it's a down candle, you're waiting for high to be taken so that you can be bullish. At what point after that not happening do you say, okay, we're not bullish, we're bearish? Do you wait until the range has been closed outside of?
So the
Because they will
best,
be
the best
Shall I
response, the
shall I
best
stop sharing?
response. Oh yeah, you can, no worries. So let me know if you stop and I just hop back on.
Yeah.
The best response to that question R3 is let the market show you.
Yeah, cool.
Oftentimes, we want to do something so much that we create a picture of what it should do way before it prints. We start trying to, oh my, I don't know what I'm going to do if this happens. But then when you look at the chart, like, oh, wait, I didn't know what I was going to do, but I'm seeing that, this candle was taken or this candle was traded through, or we get a close below that or above this. Isn't this what this should mean? Then you make a decision there. That's a difference between trying to be a part of a 10-point run versus a part of a 50-point run. If you're just trying to frame a setup for a 10-point run and you're looking at a 10-point range, then those things can scare you into doing something before you should. If it's a 100-point run, who cares if you miss the first entry? You start framing, okay, cool, where's your mile marker? Bodies below here, retracement long. Bodies below here, retracement short.
Yeah. Cool. Makes sense. Yeah.
Like, look at you rewatched the call from yesterday?
From yesterday, no, I had a chance yet. That's another thing, mate. I want you to like stop making calls for like 2 months.
Hey, don't worry. December is coming. Don't worry.
Amen.
I wanted
No,
to
not amen, because that's when you're trying to leave. Not amen, but I don't even know how to word it.
This is what I wanted to point back out. When the market did this here, right? It could be misleading to many persons because we just took a low, we had a big M5 down candle. We were talking about seeing breakaway gaps, but the market was trading up. It's trading into the breakaway gap. It's wicking into the breakaway gap. We have a big down candle down here. We CSD. Why don't I buy this? No, why is that not a buy if that's a down candle and we CSD, or that's a down candle and a stop on leg and there's FEGs here, we close up? Why don't I buy this?
Because there's a breakaway gap above.
Because there's a breakaway gap above.
Oh yeah, Akish, I was watching the video. Where's the breakaway gap here that was this the one?
That was the one.
Okay.
I don't know if they're going to. I think I did a call yesterday. If they post the call, you will thoroughly
they posted,
understand why.
But the breakaway gap you drew was somewhere around here.
M5. So if I M5 for a moment, let me take off these. Remember in real time as we were trading through ONS, there was a breakaway gap right here before the dying moment when this happened. It was right there. How do I remember this? I don't know. In real time, that's where it was. On M1, you won't see that.
Yeah, it looks filled.
Yeah. Wicks went through it afterwards. Literally in the dying moments of the M5 candle, it just came back up and did that. Yeah. That's why we read left to right.
So this is the breakaway gap, not this.
Wait a minute. This is the M5 breakaway gap. This is the M1 breakaway gap.
Oh, okay.
Yeah,
M5 takes precedence because it's a larger time frame. There's more volume.
indeed. So that's why when
So
this print, and I said, yo, somebody's going to sell this. And anybody who hasn't sold this, they're waiting for a run above that. Because that's exactly what I would do in this case. Breakaway gap to the downside, up candle, I don't know what to do. Breakaway gap to the downside, up candle, and we change. Okay, you're gonna have to hold me and take the money from me because I'm going to sell that. I am selling that and I'm putting my stop right above it. So if you want it, take it and okay. There's the run.
So can I just ask, in terms of that M5 breakaway gap, if we look at the chart right now, there isn't one. But
Right?
you're saying you're still considering it a breakaway gap because it existed until the last minute of the M5 candle suddenly wicked up and then closed the gap.
Right. So here's
Okay.
the hard pill to swallow around something like that. If
Perfection.
you only make not just the perfection, if you only make valid claims around what you see after the fact, you're going to miss a lot of stuff. Right? What if I say this run down here is an expansion that took liquidity? Right? So let's say these are some lows and we have an expansion that took liquidity here, or even that one, right? The market retraces inside the expansion. We could go back to ICT basics. As a matter of fact, let us go back to ICT basics. And this could probably put a lot of things together for a lot of persons who. This is a signature that you should know. This is a signature that, I know if I say that, I'm going to get a whole lot of questions. Not bad questions, but yeah. This is a liquidity pool. Here's an expansion.
Kish,
Hola.
is that the rule about FVGs being a hint to continuation setups?
Answer that question after you finish what you was gonna say, please.
Yeah, that's completely unrelated. That's completely unrelated. This is something, if you forget about patterns and you're trying to read price, this is something that I would, if I wasn't your mentor, if I didn't teach you anything, anything TCM related, this is something that I would share with anybody that's just pure, maybe ICT or not, I don't know. This is the expansion that broke liquidity. From the up candle to whatever the low is, that is a range.
Yep.
Once we retrace inside that range, you could play OTE, order blocks, back into a FEG, immediate rebalance, whatever, as long as this range is intact. Look for setups.
Yeah.
Right here, from this up candle down to right here. Any retracements inside that, you're bearish. Right here to right here.
You know what's funny? I simplified my approach, and this is an element that I added in. I was just showing Mark just before the call. Amen to you, bro. I love when you do this. You give me so much confidence. Thank you.
You could take this a step further.
Yeah.
If EOs and timed EO ranges are still a struggle for you, and I was supposed to say this about 30 minutes ago when I started the call, when you were pointing to something R3, I mean Rohan.
Yeah. Amen. You call me Rohan.
If we open here, right? This is for understanding purposes. If we open here for EO and the market, let me use this one. The market trades down and it prints this. This is a depiction of a 3-bar swing low. Right? Stop it right there. How do you use that low to make a decision? Not a rhetorical question. I want to hear at least 2 responses, then I add to it.
That low
Liquidity, CSD.
Yeah. And also closing below that low means we're dropping.
MSS, fair
That's
value
it.
for buying.
That's it. So Keep this in mind, plus what we just talked about here. If this is the low that's printed, EO low, and the market trades through that, right? So we go whoosh through here. How important is this? Very important.
Yeah,
Because
that's the stop out leg.
that's a stop point leg, right? It doesn't have to be a wick to be a stop point leg. It doesn't have to be a wick to frame something for a breakaway gap. We could gap through like this, print a low that does not have to be a 3-bar swing low. If there's a FEG inside here, and that FEG gets broken with bodies, that's a buy target in here. This is an entire model. Like I literally created something like this for somebody this morning, and I'll tell you the dynamics of it in a bit. If we do this afterwards, that's the expectation. That's a logical explanation or logical expectation. What you need to focus on for precision is how this is done. This portion here, how it's done is important. We talked about that. If this is all up candles, you need a down candle body. So allow this retracement to print the down candle and CSD. If this was drop wicking into that and then it print a down candle and it pushed, that down candle becomes your order block. Extend it out by the retracements to it. And you can look at this as what everybody calls like a protected low. So best case scenario, my stop is here. If there's opportunities to tighten the stop inside here, it's up to you if you want to do that. There's so many ways that we could take this and make it magical. What if this is Friday's close, right? This blue line is Friday's close. And this is Sunday's open. Isn't this the same thing? Down, 3-bar swing low. So listen closely. We gap down, create a 3-bar swing low. If that low is not being broken, and that's your range low, you target the open price here. If that low is broken and it fails to get back above the FEG, just keep looking for shorts. If that low is broken and we put the FEG here and it goes above that, that's the only condition you look for longs. This is a complete model by itself. Whenever the market starts to deliver somewhere and it goes one-sided, the first 3-bar swing high, or low, as it prints, that's your reference point. If we bag or run through that, print a breakaway gap right there, somewhere inside here, just keep going in that direction. Keep looking for trades to make new lows in this case. If the 3-bar swing low that's made here, FEG, we go above it, allow yourself to participate in longs. What if there's no long setup? Then what are you buying? What if there's a clear buy setup? Then you buy. This is a complete model again. So again.
So if it's breaking this, and we, as you said, reference the up candle and the swing low here, and we see the retracement. If we get a CSD here, we look for shorts.
Correct.
Okay.
That's what I'm saying. Keep looking for shorts unless this FEG is broken. If we open, gap down, print a 3-bar low, close below the low, just look for shorts. The only time you're expected to look for longs is if we close above the FEGs, which means you can take small losses. You should take small losses. You will take small losses inside here. Because once you're wrong, you're going to know very quickly. And you'll never have to wonder, wait, I got stopped out on a short. Should I go short again? Because if you got stopped out on a short, then your stop is probably in an ideal place. But if you get stopped out on a short, body closure should tell you whether or not what you want to see here is there or not. What if there's an up candle right here? Could be weird. What if there's an up candle right here? So the expansion leg is from something inside here to here, right? And this is retracing. And you see the up candle right there. So you sell this and you put a stop right there. And the market wicks you out and then retraces. Where did the body close? That's the only thing you need to know. Did the body fill in the FEG that's right here? Did the body close above the range high? Those are the only things you need to know. Then you could frame the direction. If you don't believe me, challenge yourself. Pull up any chart, challenge yourself. See what happens. If this is the low, let's say this is a 3-bar low, right? For convenience. We trade through it. Here's the expansion leg. You're thinking, I want to short this up candle because it just did all that. Didn't happen and it crashed. If you can frame something else to short here, then keep going short. We don't get above this, don't go long. What if they print the same fractal somewhere else? Here, we don't close above this FEG, don't go long. We drop, same thing again. If there's no FEG here, use the range high. Are we putting a bag above the range high to tell us that we're going to push higher? Then go long. That's not happening. Trust that we're going short. Over and over and over and over until we get to the quote unquote buy side of the curve.
Okay, just a quick question here. When there is no bag at where the bag is supposed to be, and we put an up candle and we CSD as the breakaway gap. So what would be the invalidation? As in we close above the up candle?
Invalidation for a breakaway gap?
Yeah, I mean,
I think he's saying if
yes.
there's no bag there. But
Yeah, if there's normally a normal bag has a FVG, we close above market structure shift. So if it's an up candle, what would it be? Close above the up candle?
Right here.
Yeah.
Then you're using this candle as an order block. That's what I would do. If we CSD, I'm trying to sell this.
But for MSS?
For MSS, use the FEG.
No, I mean, if let's say if there's no FVG.
Close above the bodies here. The bodies from the low.
Close above the low and not the up candle.
Not the up candle.
Okay, thank you.
I wouldn't use up candle.
MSS lecture. If there's no FVGs in the stop hunt leg, focus on the low.
Yeah.
Yeah.
So all of this is going to be there. Sometimes we mislabel ranges for some weird reason. The range, if the market is moving, the range must be the expansion. So this, I'd never try to trade this and fib from this height to this low. I'm fibbing from the expansion right here. I would never see this move down from here to here and fib all of that. I'm fibbing from here to there.
Why in this scenario did you use, so like, why in this scenario wasn't your expansion from here? That one makes sense because it's the one that done all of that, but why in this scenario is your expansion not from here?
This is the last expansion.
From the up candle, man.
The last up candle, the last expansion from the up candle. This is the last up candle. That's the expansion. Sounds like the order block, right?
So about that then?
Yeah, it's about right here.
Yeah, but I'm saying, so why isn't in that scenario? Is it because this up candle happens after the low?
Which one? Here?
Yeah. Why are you not doing it from there?
Same thing. Just I didn't see it. No worries. There it is.
Nah.
I didn't see it.
That makes a bit more sense. I was wondering why you didn't pick that up candle.
I just didn't see it. Don't kill me, please. Very, very mechanical. Absolutely mechanical.
That's how you frame your expansions.
How do you frame yours?
Don't ask me. I was don't know what I was doing then. What? I was there thinking, let me know. I was thinking, because this is the low, I want the first swing before the low that takes it. From that until wherever your swing low forms until you have a CSD would be the expansion leg.
They're perfect examples and then they're not perfect examples. The only way you keep in line with that is the definition. So like look at these. This to this.
Yeah.
This is what everybody expects them to look like.
Yep. I was just gonna say
that's not true. That's not true. That's the cold truth. It's not true. Where's the
So,
expansion right here?
Hmm?
Where's the expansion right here?
all right, based on the rules that you just oh no, not that you're talking about this leg, innit? You're talking about
Yeah.
that leg.
Yeah.
This leg. So based on the rules you just said, the expansion, oh, you know why this is a bit confusing? Can say from here to here, but the only reason why I say it's a bit confusing is all of that is inside of this.
So this is exactly what you should look at. So you see how your mind tells you what the correct thing is, but then the candles start having you second guess.
Yeah, yeah, yeah. I'm happy you
Normal.
asked that because I would have run off and started running with this small candle.
So in this situation, it's all up candles. We'll wait for a down candle here in CSD.
No, it's not all up candles because
Oh, that's the
Mm.
order block.
you're buying here. If you're stingy with the stop, you're trying to put it at this candle's low, and you're trying to get a new high. That simple.
So does an expansion have to leave some area of balanced price for you to define it as an expansion?
Well, if it's not leaving, is it expanding then?
I just got the answer. Now it makes sense. Everything you just did makes perfect sense. It all makes perfect sense.
If we're not
Oh my-
expanding, then we're not leaving. That's
So
how.
then-
Oh, go ahead. Sorry.
No. That's how. Your knowledge is more important.
No. Your understanding is important to me. What I'm saying
So
is
then-
that's why sometimes you can see stuff and expect it, but the market is telling you something else. But you fail to say, hey, this is not making a new high here. It's not even going to the order block. Let me take partials and go break even. It's not a good trade. It's not the best trade, but let me protect myself. No, you're like, it's only 14 points, 20 is so close. Come on, as you can do it. Then you get none.
Yeah.
Just remember, 50 points a day doesn't have to be one trade.
Kish,
Some person's life says that you don't have time to do all of that. Yeah.
Kish, sorry. Why is your entry on this candle and not this one?
Which one? Where's the CSD? Where did the CSD happen?
Here, right?
I understand. You're asking, since it's a down candle, why not buy that? Nothing wrong
Yeah.
with it. Both of them are fine. This is aggressive. This is conservative. Aggressive because you're just buying immediately, which is fine. Conservative because I don't like these aggressive folks. So to the level and it's CSDs and then I buy.
Okay, got it.
That candle was your
But,
trace.
sorry, Kish. Quick question. Don't you wait for the actual CSD? I know you at times you use 50% of the down candle, but in this case, you've put your entry right at the top of that down candle,
Mhm.
but the CSD happened after, I mean, on that green candle. Would you not take it after that CSD?
The CSD
Confirm.
happens here. This is the CSD. So by the open of next candle, by design is what I would do. Not because this went lower, I'm going to say, oh guys, this is exactly what I would do. That's a lie. The moment this closes, I'm buying this. What if I suffered 3, 4, 5 point drawdown? Insignificant for my 6R. Kidding. But yeah, this year, the CSD, this is a disruption.
In this model that you just described, is it advised to be nimble or just what do we target?
Focus
on
on
the
what is provided. If from here to here is something that you don't feel good with, leave it alone. What if I have to be risking 30 points to make 14? Leave me alone. All right, cool.